Students, how are you all? I hope you are doing well. In the previous class, we understood some basic concepts about this branch accounting. Now, based on the geographical location, we divided the branches into inland branch and foreign branch. Again, the inland branches are classified into independent branches and dependent branches. For this classification, what is the basis? The basis is nothing but maintaining books of accounts. So the branches not keeping full system of accounting, the branches which are not keeping full system of accounting are known as dependent branches, and the branches which keeps the full system of accounting is called independent branch. Okay, now we'll discuss about dependent branch and independent branch. Okay, first we'll discuss about dependent branch, later on we discuss about independent branches. Now look at dependent branch. Now, in our branch accounting, so we should remember some important note points. First point, in branch accounting, our discussion is about the business which deals with goods. See, business deals with goods as well as services. But in our whole accounting for branches or branch accounting, we discuss about the businesses which deals with the goods. Second one, head office sends goods to the branch. Generally, head office sends goods to the branch. Head office may be manufacturer or non-manufacturer. Next one, sometimes branch can also buy goods directly with the authorization of head office. This is one more assumption we should have. Next, the size of branch depends on its operations. So do remember these points. Okay, right? Next. Generally, we know how to record the transactions. Okay, see, whenever a transaction happened between two parties, both the parties record the transaction in their books of accounts. Let us assume there is a transaction between A and B. A record the transaction in his books from his point of view. B record the same transaction from his point of view, B point of view, in books of B. So when a transaction is happened, both the parties are recording the entry. That is our basic assumption. Yes or no? Right. But now here, what is happening? From accounting point of view, head office and its branches are treated as separate entities. Okay. Next, so that whenever any transaction occurred between head office and branch, we should record in head office books as well as branch books. Yes or no? Because between head office and branch, there are so many transactions. So when a transaction is happened, both the parties should record in their books of accounts. This is our main assumption. Okay, but here what is happening? Look at, to maintain proper accounting records. Generally, to maintain a proper accounting records, we should maintain separate set of books. At the same time, we should appoint an accountant in the branch. Yes or no? Separate set of books in the branch, as well as we should appoint one accountant to maintain these books of accounts. But think from head office point of view. If the branch is a small branch, what head office will think? Head office thinks that it is expensive to maintain separate books of accounts as well as to appoint one accountant separately. Yes or no? Yes. By keeping these things in your mind, at the same time, by keeping these things, what head office will do is, head office generally maintains the books of accounts in the head office only. So that in the branch, they will not maintain full accounting records or full accounting system. So they maintain only part of the accounting. Part of accounting means they may maintain petty cash, or they may maintain some stock registers, or they may maintain about the details about the debtors. That's only. But they will not maintain full accounting system. Full accounting system means what? Double entry system of accounting. I hope you understood. So branch maintains petty cash. Yes. So that, look at, the branch which depends on head office, The branch which depends on head office for its administration as well as policy makings as well as maintaining the books of accounts are called dependent branches. Hope you understood. Next. Now, accounting for dependent branches. Accounting for dependent branches depends on the price at which head office sends goods to the branch. I repeat, accounting for dependent branches depends on the price at which goods are remitted or sent to the branch. Okay, generally the goods may be sent either at cost or at selling price. The other name for selling price is invoice price or wholesale price. Here you can understand what is the difference between invoice price and wholesale price. Okay, slowly we can understand. See, if you see these things at cost, at invoice price, I hope you are trying to remember consignment topic. In the consignment topic also, consignor sends goods to consignee either at cost or at invoice price. The same concept here. But in the place of consignee, here what we are talking, branch. So head office sends goods to branch either at cost or at invoice price. So in that case, what are the accounting entries we record that we have to see. Now look at. To give accounting treatment, first, when the head office sends goods at cost as well as at selling price, we have three methods to consider. What are those three methods? These are accounting alternatives. Method means what? Accounting alternatives. That's it. So either you can follow this alternative or this alternative or third one. So you may ask, sir, why these many alternatives? See, each and every alternative or each and every method has its own limitations. To overcome these limitations, generally we follow various alternatives. Yes or no? Right. Now look at, when the head office sends goods to branch at wholesale price, then we follow wholesale branch method or wholesale price method. Okay, right. Now look at, we see one by one clearly. First, debtors method. See, this method is used when the branch size is small. See, whether the branch is a big or small depends on what its operations. Okay, do remember. Next, under this method, what we do, we open only one account, that is branch account. By preparing this branch account, we can ascertain the profit or loss made by that branch. Okay, that branch. Now look at why it is called debtors method. Under this method, we treat every branch is our debtor. Under this method, we treat our branches as our debtors, so that debtor account is debit when anything received, debtor account credit when anything given. This is the fundamental rule of this method, debtor method. Okay, now look at. What are the transactions and journal entries when goods sent by head office to the branch at cost price? Okay, to record the entries, you need a transaction. Here the transactions are between whom? Head office and branch. So what are the probable transactions between head office and branch? Try to think. See, there are so many or different transactions happens between two parties. See, you may think that what are the transactions between business and creditor? What are the transactions between business and debtor? What are the transactions between business and bank? So the transaction is between two parties. Here who are the two parties? Head office and branch. So what are the transactions may happen between head office and branch? Look at, the first and foremost transaction is nothing but to set up the branch. Head office should invest some money on the assets for the branch. Yes or no? See, without fixed assets. Without fixed assets, it is not possible to open the branch. We should buy some furniture, so we should buy some equipments, okay, and we should employ some capital to fund the fixed assets. Yes or no? Now look at it. So what is the entry we record? See, we are buying assets. We are buying assets. Is this asset for head office? No. This asset is for branch. This asset is for branch. Yes or no? Look at. So branch asset account to debit. Branch asset account debit individually. Suppose you have purchased some furniture. So branch furniture. Okay, you have purchased some machinery, branch machinery, and this branch also we have to specify. We may have different branches in different locality. Let us assume we are having branch in Delhi, so we have to open Delhi branch account. We have branch in Mumbai, so we have to open Mumbai branch account. We have branch in Chennai, we have to open Chennai branch account. Like that we should mention the location name. Why? It is easy for us to identify to which location we are sending stock or assets, all those things. Hope you understood. Right. Branch asset account to debit to cash account or bank account, being assets purchased for branch. I hope you understood first one. Right. So next transaction is what? Next transaction. Head office sends goods to the branch. If you remember consignment, see, please compare this concept with consignment, then you can understand easily. Consignment, what happens? Consignor remits goods to consignee. Here, head office sends goods to branch. So in case of consignment, what is the entry we have written? Consignment account to debit to goods sent on consignment account. Here, what is the entry we record? Branch. In the place of consignment, we are writing here branch. So branch account to debit, branch account to debit to goods sent. Their goods sent on consignment, here goods sent to branch. That's it. Being goods sent to branch. I hope you are understanding. So compare consignment and branch, then it becomes easy for us. Next, this is the second transaction. Now what is the next transaction? Tell me. We send goods to the branch. Sometimes branch may return goods to us. Okay, so when consignee returns goods to us, what is the entry? Goods sent on consignment account debit to consignment account. Here, what is the entry? Reversal of above entry. Reversal of above entry. Look at goods sent to branch account to debit to branch account. Simple. Being goods returned by so and so branch. Simple narration you can write. I hope you are understanding, students. See, try to understand the concept and transactions in a logical manner. Okay. Now, next one. Fourth one. When head office meets the branch expenses or sends cash to the branch for meeting expenses. See here, in branch system, all the expenses of branch should be paid by the head office. Okay, sometimes to meet petty expenses, head office sends some fixed amount. So here petty cash book concept comes. So to the branch, head office allots some fixed amount. So small expenses are paid by the branch manager. Okay, and he prepares one petty cash book. Clear? Now, if any apart from small expenses, if any other expenses are there, then branch will pay directly. Okay, right. Now, what is the entry? In consignment, what is the entry for expenses? Did you remember? Consignment account to debit to cash or bank. Here also same. Branch account to debit. Branch account to debit to cash or bank, being expenses of branch paid or being amount sent to branch for petty expenses. You can write the narration according to the situation. Next one is what? Goods sold by the branch. Yes or no? Now we sent goods, some of the goods may be returned, and we paid some amount towards expenses. What is the next transaction? See, here we are understanding in a logical manner. What may be the next transaction? Goods sold by the branch. Okay, can you tell me the entry for goods sold by consignee? Did you remember what is the entry we have written? Consignee account debit to consignment account. But here we will not record any entry. Look at it. No entry we record in our books. Simple. Next, why we are not recording the entry, you can understand slowly. Next one, when amount received from branch. See, after selling goods, who is receiving amount? Branch. Okay, now the branch remits amount to the head office. Earlier days there is no banking system, so the amount may be remitted by branch to the head office either manually, that means one person from branch, he travel to head office and he hand over the cash. Another way is what? Sending money through money order, postal system. Okay, after introduction of these banks, money can be transferred from branch to head office directly. And nowadays it is very easy for us to transfer money from branch to head office. Instantly we can transfer money from branch to head office. When earlier days, when banking system also there, when there is a banking system, but we don't have whatever the system we are having now, we don't have such system in the earlier days. So sometimes what happens, we sent money to the, or we remitted money to the head office, but sometimes due to some reasons the bank may not receive cash. Nowadays instantly head office receive cash, but earlier days head office, due to some reasons, head office may not be received the cash which is sent by the branch. Do remember. Now when amount received from branch, what is the entry? We receive amount, cash or bank, most probably online transfers only. Cash or bank account to debit to branch account. Hope you are understanding. Next one is what? So these are the various transactions happens during the year. Now at the end of the year, what are the transactions and entries? Look at the end of the year, or at the end of closing books of accounts. Look at what happens. For closing, goods sent to branch account. Here if you observe, we have opened an account, goods sent to branch. Here we have opened an account, goods sent to branch. Now that account should be closed. Did you remember goods sent on consignment account? How did you close goods sent on consignment account? Goods sent on consignment account to debit to purchases account or to trading account. I hope you understood. Now look at it. So here also same. Look at what is the entry. This is very, very important. Look at goods sent to branch account debit to purchases account or trading account. See, when we can credit purchases account, when our business is a non-manufacturing business, trader. When we credit a trading account in case of manufacturer. In case of manufacturer, we credit simply trading account. In case of non-manufacturer, we credit purchase account. If you are passing this entry after preparation of trial balance, simply we can credit purchases. Next transaction is for closing balances of assets at the branch. See, we have purchased assets for the purpose of establishing the branch. Now assets we have in the premises of branch, but who is the owner for this branch, for those assets? Our head office. Yes or no? Now in our head office books, we should record the assets and their values in the premises of branch. Now, at the time of purchase of assets, for establishing the branch, what is the entry we have written? Branch assets account to debit to cash or bank account. Here I forgot to discuss one more transaction. Look at the end I will write. At the end I will write. Look at one more transaction. One more here one more entry you can write. At the time of sending assets to the branch what is the entry we can write? Tell me. Branch account to debit to branch assets account. At the time of purchase of asset, we debited purchase asset, branch asset account. Now these assets we are sending to the branch. So asset is going out, credit. Okay. After writing this entry, now tell me. Yeah. Now branch is having assets. We have to incorporate those assets in our balance sheet. For that, what is the entry we'll write? Branch assets account debit. Here asset consists of current asset and fixed assets. Okay. If it is in case of fixed asset, deduct the depreciation and take the net amount. Branch asset account debit to branch account. We are taking the closing balances of assets there in the branch into our books of accounts. First asset purchased, next asset sent to bank. Asset purchase, debit, asset sent to bank, credit. Now at the end of the year, we are bringing those assets into our books. Right. So this is the entry we record for closing balances of assets. Now, next one. For closing balances of liabilities at the branch. See, if you have any liability for the branch, liabilities of the branch, then you have to bring them into our head office books. Now, generally liability shows which balance? Credit balance. Two liabilities individually. So, branch account to debit to liabilities account. These are the closing balances of liabilities of branch. Here liabilities we can write individually. Okay. Next entry. Goods supplied to branch but not received by the branch. Actually, we sent goods to the branch, but the branch has not received the goods. That means what? The goods are in transit, but at the time of sending goods to the branch, what is the entry we have written? Branch account to debit to goods sent to branch account. Now this entry we can reverse. How? Goods in transit account to debit to branch account. If you remember, when we sent goods on consignment, but the consignee not received the goods, then what is the entry we have written? Okay, goods in transit account debit to consignment account. Did you remember the same entry? Okay. For transferring profit or loss to the general profit and loss account. See, after recording all these entries in the branch account, this account shows either debit balance or credit balance. If it is credit balance means credit side is more than debit, it is treated as profit. If account shows debit balance means debit side is more, it is nothing but loss. Whether it is profit or loss, that we transfer to general profit and loss account. In the consignment also, when we get profit or loss, that is also transferred to which account? General profit and loss account. Here also the same accounting treatment. Look at, if it is profit, If it is profit, what is the entry? Tell me. Branch account to debit. Credit is more. Credit is more. Branch account to debit to general P&L account. General profit and loss account. If it is loss, then reverse the entry. Reverse the entry. Look at it. General P&L account debit or profit and loss account debit simply to branch account. To branch account. With this, books of accounts are closed. At the same time, branch account is also closed. Branch account is also closed. Now, next year, next financial year, again we open branch account. Again we open branch account. So now next financial year, when you open branch account, all assets there in the branch are taken as opening balances. All the liabilities of the branch taken as opening balances. Okay, now look at the beginning of the next year. At the beginning of the next year, what we have to do? Two important entries, that they are reverse entry. Reverse entry number 8. What is the entry number 8 here? Look at, for closing balances of assets at the branch. Now closing balances of assets of the branch at the end of the year, now they will become opening balances at the beginning of the year. Whatever the entry you have written earlier, now it is reversed. Now what is the reversal entry we pass? Look at the reversal entry. Branch account debit to branch assets account. Here individual items we write. Individual items. That means what? Asset may be again current asset and fixed asset. Stock in trade, cash at bank, cash, petty cash, or any fixed assets, or any prepaid expenses. All those things. All those things. Okay. Next one. Next one, reverse entry number 9 to show opening balances of branch liabilities in the branch account. Look at entry number 9. What is entry number 9? Look at here. For closing balances of liability. Now, at the end of the year, they are closing balances. At the beginning of the year, they are opening balances. Now, reverse this entry simply. What is the entry? Reversal entry. Branch liabilities. So liabilities account debit. So we can write branch liabilities. Branch liabilities account debit to branch account. To branch account. These two entries we should record compulsorily at the beginning of the year. Okay. After that, all the remaining entries are repeated every year. After that, all the remaining entries are repeated. What are the remaining entries? Goods sent to branch, goods returned by branch, expenses of branch met by the head office or amount sent. Okay, amount remitted by branch. Again, at the end of the year, whatever the closing entries we have passed in the previously, the same are passed now. So this is a cycling process. This is a cycling process. So these are the transactions and entries we record under debtors method when goods are sent to the branch by the head office at cost price. At cost price. Now look at, now we prepare branch account. Now simply we'll prepare branch account. How an account is prepared? From the above journal entries. Now look at the first entry. Look at the first entry. Is this entry posted to branch account? No. So first entry is what? Branch asset to cash. After this immediately we record this entry. I have written it at the end. Look at this entry. This one. Branch account to debit to branch assets account. Branch assets account. Look at, to branch assets account. To branch assets. So here you can write one by one. Here you can write one by one. After that, third entry is what? Goods sent to branch. What is the entry? Branch account debit to goods sent on. Goods sent, not on, goods sent to branch account. Yes or no? That's it. What is the next entry? Expenses of branch paid by the head office. So in that, what is the entry? To cash or bank account. Expenses, yes. Suppose if you have given amount for petty cash purpose, then what is the entry? Same, branch account debit to cash or bank account. Major expenses, branch head office will pay. Petty expenses, for payment of petty expenses, we issue some amount. So this is for what purpose? Petty expenses. Petty expenses purpose. Now what is the next entry? Goods returned by the branch. What is the entry we have written? Goods sent to branch account debit to branch account. Branch account is credit. So by goods sent to branch. Goods sent to branch account. So these are nothing but returns. Yes or no? What's the next one? Cash remittance. Cash remitted to the head office. What is the entry written? Head office, in the books of head office, cash account debit to branch account. Branch account is credited here. So by cash or bank account. Cash remitted by branch. Are you able to understand, students? The above entries simply we are posting into branch account. That's it. Okay. Next one. At the end of the year, look at amount received over. First six entries. Okay, fine. This is also goods returned over, expenses over, amount okay, then amount received from branch. Okay, now at the end of the year, closing the books of accounts. At the end of closing the books of accounts, anyway we are not maintaining here. Assume goods sent to branch account, we can prepare easily. We are preparing branch account. Now for closing balances of asset, branch account is credit. So on the credit side, what we can write? By branch assets. By branch assets. These are nothing but closing balances. Try to observe closing balances. So here what may be the closing balances of assets? Stock in hand or stock in trade. This is also our asset. Now whatever the cash balance available with the branch, that is also our asset. Next, any petty cash. Okay, that is also our asset. Next one, any debtors. Debtors also is our asset. Any fixed asset. This is also our asset. So all these are closing balances. Okay, now liabilities closing balance. Look at two closing balances of liability. Closing balances of liabilities. Individually you can write whatever the liabilities you have, you can write there. Okay, after that what? Now we balance this branch account. Now if credit is more than debit, then it is profit. We transfer it to profit and loss account. So to profit and loss account, profit transferred. Suppose if debit is more than credit, it is loss. So in that case, by profit and loss account, loss transferred. loss transferred. That's it. We close this account. Simply close the account. Either profit or loss, either one will appear. Okay. Now look at next year. Next year we open branch account again. So whatever the closing balances we have at the end of the year, they will become opening balances for the next year. And whatever the closing balances of liabilities we have in the previous year, they will become opening balances for the next year. Okay. Now look at, continue this account. Continue this account. Okay. Now look at, to balance brought down. To balance brought down. What are those accounts? Stock in trade or stock, cash, petty cash, debtors, and any fixed assets, anything. Now credit side by balance brought down liabilities. If you have liabilities, then okay, otherwise leave it blank. Leave it blank. Simple. Next year again we'll record entries, and again this branch account is closed. Again we calculate profit or loss. Next year beginning we transfer opening balances again. So it's a cycling process. It is a cycling process. So this is how we prepare branch account under debtors method. I hope you understood this. Whenever you get a doubt, pause the video and think. If you have any doubts, you can post your doubt in the form of comment, or you can post in our Telegram group. Okay students, look at, so entries, now branch account. Entries to branch account. First, try to understand the accounting entries and its posting in branch account. After understanding this concept, we see one problem. We try to solve one problem. So here I am taking one problem. Okay, problem number 1A. So I am taking problem from ICAI only. So we try to solve this problem in the next video. So meantime, you people try to understand the method and transactions, their entries, and how to prepare branch. See, account is always prepared from entries only. Entries are written from transactions only. So when you can understand the transaction between head office and branch, you can complete this problem easily. Don't try to blindly prepare this branch account. So try to prepare this account with a logic behind it. See, account always prepared with the entries only. Yes or no? So entry we have to read in our mind and post it in the branch account. Don't blindly prepare this branch account. Hope you understood, students. So we meet again in the next video with illustration 1. Till then, bye bye everyone.